And welcome into our discussion today, talking about our methodology of the Iron Retirement Growth Series. I'm Nolan Baker, owner of the Retirement Guys Formula, and we're going to be talking about the tactical portfolio offered here through the Retirement Guys Formula, our registered investment advisory. First of all, let's jump into a little bit of our disclaimers here, and if you'd like to read fully through all of the disclaimers, all you need to do is just pause this video and you can read all of the information and get the various links that we have throughout that. So the first thing that we want to do is take a look at the overview on the Iron Retirement Series. What this is this is a tactical portfolio with an objective of long-term growth. So the word tactical means that we have the ability to increase or decrease our equity exposure, and that's really in comparison to the traditional buy and hold type strategy. This portfolio also invests in U.S. companies in numerous countries around the world, so it really gives us some good broad diversification both here in the U.S. and globally. We use a software called Riskalyze that would measure risk in a portfolio. We can measure risk anywhere from 0 being the lowest risk score to 100 being the highest risk score. The Iron Retirement Growth Series, when it is fully allocated in equities, it has a risk score of 81. And what that means is that this risk score during normal market conditions in a 6-month time frame, the portfolio could be down anywhere from 18% or it could be up as much as 25%. And that's what you're going to see in the typical range of returns. Now, if we go to the next slide and we take a look at why we like this portfolio, if we look at the reasons why we like this portfolio, as a kid, riding a roller coaster, used to be a blast. The suspense really kind of builds you up as you're ticking up and getting to the top, and then all of a sudden the adrenaline is rushing as you're going down. You're going 80 miles an hour, hitting the hard turns, maybe going upside down, getting the adrenaline rush really at the same time. For others, really, our bodies aren't really simply built to withstand the aggressive ups and downs. And this is really true when we think about our investments, especially as we get older and closer to or in retirement time. With the Iron Retirement strategy, we attempt to smoothen out the ups and downs of the volatile market by exiting the markets when the markets begin to go down, while getting in or staying invested when it looks like it's a possible ride up. From the portfolio management, if we look at the next slide here, what we can take a look at is what we're doing is we're looking at the long-term moving averages, using that to give us the triggers for buy and sell signals. When an individual holding is above the moving average, we would then invest 1/3 of the position until we're fully bought in. Now, on the contrary, we will sell 1/3 of the position when the holding is below the moving average. Each week, we review the signals to determine what our buy and sell signals are on a weekly basis. This larger moving average allows us to attempt to participate in the upswings while avoiding substantial downturns without being overly too reactive to short-term market conditions. The manager, being us, also has the discretion to override the signal. So we're using this similar to like a GPS in your car, but if we're looking and the GPS says go forward and we're looking and the bridge is out, it does allow us to still have some discretion as the manager in the portfolio. Next, let's take a look at a visualization on this, and we can see what the portfolio visualization looks like. So with the portfolio visualization, this is a chart just simply showing the S&P 500 growth ETF. And the purple line in this example is the moving average. So on the left-hand side, what we can see is we can see when the index went above the purple line, each and every week had indicated 1/3 buy signals. So the third signal being a fully allocated position, thus hopefully allowing us to participate in the gains after being fully invested in this example. And if you notice here how well the strategy performs when you have a consistent uptrend in the market. Now, in the next slide, what we can also do is we can take a look at the portfolio management when the market is headed in a downturn. So there we can see on the left-hand side where the market went below the moving average. Again, the purple line had indicated the first sell position followed by the next week another sell position, followed by the third sell position in that third week, being fully out of that position and moving to a defensive strategy, either cash or fixed income. And what that does in this example is you can see how this would help avoid the further losses using this example. And in this example, again, you can see how the strategy performs when you have a consistent downtrend overall in the market. So we do have also other versions available of our Iron Retirement series. And if we look at the other versions of Iron Retirement, they're really very identical to what we described here in our Iron Retirement Growth series, but what we do is we add in some additional fixed income. What this can do is this can allow for some lower risk, maybe some higher yield, while not maybe giving up all of the growth in the portfolio. So the moderate growth portfolio, it has a risk score of 70. The moderate portfolio has a risk score of 59. The conservative has a risk score of 47. And the very conservative has a risk score of 36. So some of the key takeaways when we take a look at the Iron Retirement series is it's really, in my opinion, great for people that are looking for long-term growth and they want to have a tactical portfolio versus just a buy and hold strategy. The risk level is also based upon the client's individual preferences, and again, we can go from the very conservative all the way up to the growth model. We're using ETFs to try to maintain a very low-cost structure that holds domestic stocks in distinct geographic regions around the world. So let's get in touch. If you'd like to learn a little bit more about the Iron Retirement series, I'd encourage you to talk to the person who shared this video with you, or if this portfolio is interest to you, you can give us a call here at the office. You can call the Retirement Guys formula. Our number here is 419-842-0550. You can also get additional information online at retirementguysformula.com. Thanks for tuning in today. Again, I'm Nolan Baker, owner of the Retirement Guys Formula, today covering the Iron Retirement series.